Hi, I'm Max Keiser. This is the Keiser Report as we ponder the future and look into 2020, what fascinating stories will come our way. You know, I've often said on this show that you can't have capitalism without capital. Of course, you can't have capital without positive interest rates encouraging people to save. And this next story, this next whole show, this next entire segment is going to be dedicated to this very notion. And I present to you Stacy.
You know, that shape there used to be used in ancient Greece for democratic purposes. I think they would flip it around, and if your name was on it, you got to be on the jury. The same with the magic 8-ball sort of concept. That's sort of the shape of it.
You could do like a digital version of Shakespeare. Oh, Yorick, I knew him well. Isn't that one of his plays?
We're going to cover this capitalism without capital because, in fact, it is very undemocratic. It's the opposite of that, and it's absence of justice in it. And because of that, because of this propping up of an unjust system, we have zombie economy. And this is John Authers agreeing with what you, Max Keiser, has said many times on the show over the past 10 years, especially. Capitalists without capital are ruling capitalism. What does it mean that some of the decade's big market winners were companies with no real net worth? So the blue line at the top of this chart here is the outperformance of companies in the S&P 500 that actually have negative book value. There's something like 40% of the S&P 500 have negative book value. If you sold off all their assets, it wouldn't pay off all their debts.
I mean, this is a fascinating trend. The only way they are sustained is by cash infusions or cash transfusions into this dead corpse of a zombie corporation. And because they have lobbying strength and because they control interest rates to zero or be under zero, negative rates, they're able to maintain a huge percentage of the S&P 500, crowding out viable businesses. This is a classic misallocation that you would find if you were to study, let's say, the Austrian School of Economics would predict this type of misallocation of capital when you don't give money any value. The US dollar has a negative value, therefore it's worth less than zero, and it's resulted in this fascinating marketplace where the biggest companies in the market actually have no book value or tangible net saleable value at all.
Well, he's presenting three options for what this can mean. And first, before he goes into those three options, he uses a phrase that Michael Pinto used in the last interview we did here on Keiser Report. He says, the fact that 40% of public stocks in the U.S. have negative tangible value versus 15% 2 decades ago. He says, this seems nuts. Capitalists without capital are ruling capitalism. It also sounds very scary. The U.S. stock market has pleasantly surprised many people by going on a decade-long rally, but the success of the negative value companies makes it sound as though that success is entirely built on sand. So what can explain this? He looks at Vincent Doulard of INTL Incorporated and for his explanation. But remember, this is what Michael Pinto had said about he's not a perma-bear, but he said this thing is entirely built on sand. And as you know, sand, if you've ever seen what dunes do and stuff like that, it just, there's also a great video out recently of a sand sliding down into a giant hole in Saudi Arabia. Of course, this is all part of this sand allegory that's going on at the moment. But one of the ideas, the first one he offers, is financialization. This is down to rapacious financial engineers and private equity investors who've taken over companies, sold their physical assets, and leveraged them to the hilt. Rather than invest in new assets that make something, any new cash flow goes toward buying up shares and levering up still further. The entire rally is a triumph of creative accounting. That's one option.
Right. Well, this is what I would also term the Sovietization of the American economy. Remember, in the Soviet Union, they would just target number of tractors produced or amount of grains harvested, regardless of whether it was done in a profitable way or in an economically sensible way. They just targeted that number. We want X number of tractors, we want X number of cars, and we'll spend whatever it takes to get to that number. And the economy collapsed, and they kind of learned their lesson, and they don't do that anymore. In America, though, they didn't learn the lesson because they have the Federal Reserve Bank, which is the American version of the Politburo, and they target interest rates. And they say, we don't care how many companies go negative book value. We don't care how much of a wealth and income gap we create. We don't care how much of an environmental catastrophe we cause. We're going to target the stock price based on us targeting money, the value of money at the Politburo at 0%. And the result will be the same.
That's their third option of zombie companies. But regarding this private equity model, it also fits into what you're saying there is like all the evidence before you, shows that what their ideology accepts this just mass hollowing out of giant 200-year-old companies across America, Sears, all these huge companies that are just hollowed out and loaded with debt by private equity, thousands of jobs lost, entire industry destroyed by private equity. And our ideology, we have to accept this sort of hyper-normalization that everything's fine, everything's burning around us, the actual fabric of your economy is collapsing due to this private equity model, and we're all saying it's just fine because they're making profit and profit is good and this is our ideology and you just focus on profit. And if Steven Schwartzman is making $2, $3, $4, $5 billion a year off this, that's a good thing, right? We need to celebrate billionaires and this is a good thing.
Right, well, we talked about Austrian economics. Let's talk about Marxist economics. Of course, he famously said, Karl Marx, that capitalists would sell them their rope to themselves to hang themselves, right? So they are hollowing out their own economy, principally in America, because they've hollowed out about as much of the global economy that they possibly can. The rest of the globe is now going de-dollarization, de-globalization, and the U.S. dollar is on its way out as world reserve currency. So the U.S. has to turn inward and hollow out its own economy to keep the plutocrats and the kleptocrats where they are.
The other option of why we have so many net negative book valued companies is that the phenomenon is a side effect of the dematerialization of capitalism. Material assets don't matter as much as they used to. To believe that, we don't even need to succumb to airy excitement over the sharing economy in the era of the internet. Companies need far fewer physical assets to make a profit. And with rates spectacularly low for a decade, the economic moat once provided by factories, retail branch networks, or other big physical investments is no longer impregnable. General Electric provides the most famous and painful example of this. Of course, they went into financialization and offering loans and stuff like that, and they didn't need to make all these turbines and real things anymore.
And they're now collapsing.
Yes.
Right, so dematerialization is the beginning of financialization, and all the S&P 500 relies on financialization. Apple Computer relies on stock buybacks and accounting fraud to keep the stock price higher, and slave labor overseas, as Ricky Gervais pointed out quite eloquently at the recent Golden Globe Awards. But the materialization isn't going away. So countries out there that are focused on the materialization of the economy, that is oil, and that is labor and wages, and a commodity-backed currency, as we'll see in develop probably in 2020, some major economy will introduce a gold-backed currency. Then we'll see how dematerialization and relying on financial engineering and 0% interest rates is not the way to build a future. Things
swing in cycles. We go up, we go down. We have creative destruction, except for we don't have creative destruction anymore because that has been deemed this is the reign of terror, essentially, part of the ideological war. Like we won, remember, in the Cold War, capitalism won, it was the end of history, and now we have a fundamentalist sort of view of like, we only look at the profit, and we look at the stock price. And if those aren't going up, then somebody has failed us, capitalism has failed us, we need to make it work, we need to pretend it's working, we need to keep these stock prices up. And so, the third option, it reflects the rise of zombie companies. By these, I mean companies that have been around for a long time and are no longer competitive, but can keep staggering forward, zombie-like, because it is so easy to obtain cheap financing. This should be of concern because it suggests that capitalism's process of creative destruction isn't working. Zombie companies tend to be less productive than others, so their survival may well be part of the explanation for the low productivity that has bedeviled the West since the financial crisis.
Right. I mean, I've said this, that Russia and America are like two ships passing in the night, right? Russia is moving toward a more capitalist society, and America is moving more toward a Soviet Union. It's like Trump is Khrushchev, and Putin is more like Eisenhower. He's out there building infrastructure, building bridges, building an economy. And these two countries are, going in opposite directions. And the U.S., as our friend Dmitry Orlov wrote about brilliantly in his essay, The Collapse Gap, would both collapse for similar reasons. Soviet Union collapsed first, and America's collapse is probably going to happen this year.
Again, it's like beyond any nation, beyond any individual historical fact of this moment. The history suggests that all empires are all powerful beings like the central bank, the New York Fed. The New York Fed has created moral hazard. They have helped, everybody wants to help their children out. You want to make sure they don't make mistakes. You want to help your friend out. You don't like to see them suffering. We saw that in 2008. We saw James Cramer on CNBC crying that the Fed shouldn't be academic. These people are suffering at Bear Stearns. You have to save them. And they feel bad. They're friends. They go to cocktail parties together, dinner parties. They're all friends, and they save them. But they've destroyed them and they harmed them in the long term. And this is what the results are. Here let's look at Germany, which is a huge capitalist country, massive export economy. And let's look what has happened to them because of negative interest rates. Good morning from Germany, where low interest rates are causing Germans to save more and more money. Retail bank deposits have hit a fresh all-time high of 2.41 trillion euros, despite banks starting to pass on costs of negative rates to their depositors. 25% of deposits are subject to negative nominal interest rates, despite them being punished, and you're going to be, we're destroying the village to save the village. We're destroying your savings to save capitalism. They're still saving more because they don't want to be subject to the whims of this ball of debt.
Well, this is why the dollar is on its last legs, because eventually everybody is going to realize the ultimate saving instruments are gold and Bitcoin. Gold has already started the third leg of its bull market. So it's breaking through 1,600 on its way to 22,
Started
24.
back in 2002, 2003, yeah.
2,600, 3,000. Bitcoin is going to hit a new all-time high this year because of negative interest rates. And the Germans are showing the way. They're saying that we're not going to be fooled into spending because you're charging us to store our money at your bank. We're going to save more. So apparently the academics were wrong. The negative rates didn't cause people to spend. It's actually panic saving people in Germany, and that'll happen all over the world. It'll kill the dollar, and gold and Bitcoin will make new all-time highs this year, according to this orb of profit.
And finally, of course, the Fed is just focused on the stock prices, and that is the mechanism of wealth delivery and distribution in the United States. And just to put things into perspective, the average U.S. worker must now work 126 hours to buy one share of S&P 500. That's a fresh record. In the 1980s, when you were working on Wall Street, Max, it took less than 20 hours. So it's further and further out of reach as the command and control pick winners over all the losers.
Yes, I see a break coming in our immediate future. Stay tuned. Much more coming after the break. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Tone Vays. Tone, welcome back.
Hey, Max. Glad to be back on the show as always.
So, Tone, first, tell us about Unconfiscatable, your conference, your Bitcoin conference in Las Vegas. Stacy and I will be there. What's in the cards?
It is happening in Las Vegas because there is a poker tournament alongside the event for crypto celebrities like yourself, Max, though I know you don't play. And we're trying to make it better than last year. You were there in attendance. You did an excellent fireside chat with Trace Mayer. We've got a couple of more really big key speakers. And we have to keep fighting. We have to keep promoting and educating about Bitcoin, while a few years ago, we had to educate the general public as to the importance of Bitcoin and how it can help the world by bringing financial freedom. Now we have to have this fight as well inside our own ecosystem. So many people are just trying to promote their own currency that they have created instead of building on something great. And that was the birth of Unconfiscatable in order to educate people within our own community as to why Bitcoin is so important, not just to the outside world.
Unconfiscatable, that actually refers to a major talking point when you're discussing Bitcoin. It has this quality of being unconfiscatable or virtually unconfiscatable. And I think this is a very important attribute of it when you're talking about countries like Argentina and others where Bitcoin adoption is skyrocketing at the moment because this is a store of value that is unconfiscatable. In this regard, it is vastly superior to gold. Your thoughts, Tone?
Absolutely. And this was the property that really got me interested in Bitcoin. I wish the property of censorship-resistant value transfer got me all hyped about Bitcoin. I actually heard about it from you. It was watching the Keiser Report back in late 2010, early 2011, when I heard about Bitcoin through the WikiLeaks use case, when WikiLeaks had to use Bitcoin for donations when they got cut off by Visa, MasterCard, and PayPal. And then we had the use case of Silk Road and basically the use of Bitcoin as a payment. That didn't interest me as much. It was all about the unconfiscatability property that I witnessed firsthand with the events of Cyprus, when the European government simply showed up and confiscated more than 50% of everybody's money in the bank accounts above 100,000 euros. And I said, whoa, this is scary. What if this happens across many developed nations? We know it happens in the developing world, but what if this happens, in the US? What if this happens in Germany? What if this happens what if this happens in the UK? And that's the property that really got me interested. Then we had the events of Greece that, again, set this point home. You got to have access to your own money. In Greece, the banks were shut down for weeks. They allowed you to withdraw 20 euros a day of your own money from the ATM machines. And this is just ridiculous. And this is the kind of thing that you can't stop people from using Bitcoin. And this unconfiscatability property is so critical, and gold can't do it anymore. Gold is heavy, it's hard to transport, it's hard to transact, and the metal detectors have made gold confiscatable for the last 100 years, and it's about time we have Bitcoin.
Yeah, you mentioned the Bitcoin community and how education within the community is necessary. And I wanted to follow up on that point. Bitcoin is distributed. It's virtually distributed. It always tends to seek being distributed, and the community is constantly trying to concentrate it. In other words, there was the Bitcoin Foundation a number of years ago that blew up. Then there's, just in the last week or so, something called the Nakamoto Group. It's like Bitcoin people are trying to create a central authority about Bitcoin, and it immediately blew up. So why doesn't the community even understand Bitcoin? It seems like the worst educated about Bitcoin are the people who claim to know something about Bitcoin, Tone.
I'm with you, Max. I'm with you. Look, it's a combination of two things. It's a combination of people wanting to follow a leader, and it's a combination of people wanting to be leaders to have people follow them. And this is a very dangerous combination, and Bitcoin has struggled with this since the early days. Even back when there weren't that many developers on Bitcoin, and Gavin Andreessen was the top developer after Satoshi to help Bitcoin code grow. And one of the first things he did was take a meeting with with the government agencies in the US to explain Bitcoin to them. Satoshi immediately disappeared after that. We then had Mike Hearn trying to fork Bitcoin with Bitcoin XT back in the 2016, 2015 days, trying to create censorship in Bitcoin, trying to blacklist certain aspects. And this is the fight. And this is why Bitcoin remains resilient. The amount of eyes looking at the Bitcoin code to make sure that no one sneaks anything in there that, years down the line turns out to be critical and prevents it from having this kind of decentralization. I always laugh when I hear companies talking about how they're going to build a decentralized platform. It's a giant catch-22. If you are building a decentralized platform, by default, it will never be decentralized because you're starting the sentence with "you are building it." The reason why Bitcoin is what it is because it kind of just got thrown out there, not expecting it to really work, and it worked, and it grew in the wild. And what Bitcoin did for its first 2 years is just not replicatable. And that's what makes it so unique. And everyone that tries to tell the ecosystem what to do ends up failing, and they end up looking really, really bad. They end up forking it. They end up creating their own money. They end up, they basically, the way I see it is, it's this capitalistic model versus the socialist communist model. Like, you think you have the answer, and if people don't follow you, you have to force them to follow you. And unfortunately, too many people still believe in that kind of model. You have to do what I say because I know better, and I will force it, either technologically or socially.
Now, you mentioned that there are, in fact, developers on Bitcoin, and they work very slowly and methodically and with a great deal of care to bring improvements to the protocol. And then those improvements go through a rigorous scrutiny, and they are adopted accordingly. One such adoption was SegWit, which if people who know Bitcoin know that there was something called the block war, the block size war going back a few years. SegWit was introduced thanks to you and others like as part of that group, Samson Mao, of course, and the Vortex and others. And I see that SegWit is now at 66% adoption, which is high. BitMEX, one of the largest exchanges in the world, now has SegWit. And it looks like that was a huge hit. But, this is should be celebrated in the community, and yet it's still seen with skeptical eyes by many in the community, Tone.
Yeah, and it's very, very strange. When I first heard of SegWit and SegWit was being built out, everyone was under the impression that it was great for everyone. And then all of a sudden, just before the launch, all of these campaigns started that they didn't want it. And it didn't make sense to me at all. SegWit makes transactions faster. It makes them cheaper. I understand why the miners may not be very happy about it, but that's fine. The miner's job is to mine Bitcoin. The transactions will still give them payments in the future. And SegWit was critical. SegWit fixed a bug that was preventing second layer solutions from really taking off, because these blockchains need to scale. The Bitcoin blockchain can now scale with second layer solutions. And that fight was very, very strange. I don't think something like that is going to happen again, but it was absolutely critical. We can now scale. We can now have 1 million transactions a second with Lightning. And that's going to take Bitcoin to the next level. The good thing is that while Lightning is really being built out on the back end, because Bitcoin is not currently in its hype cycle, I haven't really been using Lightning myself too much because the traditional Bitcoin payments are cheap and fast, and there isn't a giant need for Lightning right now, but that's a good thing, because all of these people coding Lightning wallets can make them more user-friendly, can make them more efficient, can make them more stable. So when real adoption comes in a year or two, the second layer solution will be ready, and you can have almost infinite number of payments a second. I can't wait. I'm really optimistic about the future of Bitcoin when people finally realize how important it is to the global financial system.
You mentioned the miners there. Of course, since SegWit was introduced, the hash rate has gone straight up. We're over 100 quintillion transactions per second. Miners are making lots of money. They're adding more capacity all the time. So clearly, it wasn't an impediment to miners. Miners have never made more money than they are right now. So that argument was a non-starter, and it turned out to be a false argument. Now, you mentioned the prospects for Bitcoin, and you're very excited by it. What about the price? Because you run a channel, you do technical analysis on Bitcoin price. You've had some great calls in the past. What are we looking at here in the short term to medium term on the Bitcoin price, Tone?
I'm still looking for slightly lower lows. I'm looking for the price of Bitcoin to pull back below 6,000 before the Bitcoin halving, which is going to take place in May. That's when the new supply of Bitcoin gets cut in half, and that's usually when Bitcoin starts to rise soon after that. I still think there's going to be a little bit more of a pullback, but towards the end of 2020, at some time this year, I will turn into a bull looking for new all-time highs, either in 2021 or 2022. I'm patient. I can wait. We'll get there. I'm not concerned.
All right, Tone Vays, that's going to do it for this edition. Thanks for being on the Keiser Report.
Thank you, Max.
And that's it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Tone Vays. You can learn more about the conference by visiting unconfiscatable.com. If you'd like to get in touch with us on Twitter, it's Keiser Report. Until next time, bye, y'all.